Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the fourth quarter of 2022, and that stock is Pepsi. And we can see that over the last year, Pepsi is up almost 9%. In the same time period, the S&P 500 is down almost 9%, so they are outperforming the market over the last year. We can see over the 5-year chart, the stock is up around 70%, but keep in mind, PepsiCo is a dividend-paying stock, so although it looks like it's just a 69% return for PepsiCo shareholders, it's actually a lot more than that if you take into account reinvestment of dividends, and that's something we're actually going to explore in this video. We're going to see how much shareholders of Pepsi have actually returned over the last few years based on their investment. And so basically we're going to look at some of the recent news that's come out surrounding the company, look at their financial statements, and then use a discounted cash flow model to figure out if this is a good buying price for Pepsi from a value investing perspective. So right here we can see in this article they point out that PepsiCo might be a better dividend paying stock than Coca-Cola. Coca-Cola is obviously the world's leading soda brand. They have name recognition. PepsiCo is a number 2 soda brand behind Coca-Cola. And then on top of that, for those of you who don't know PepsiCo, they also own a couple of well-known brands like Frito-Lay chips and Quaker foods. So they are a little bit more diversified in comparison to Coca-Cola. But that being said, this article points out that the second place soda company might be a better dividend paying investment if you're a dividend investor. And so right here, if we scroll down here, they point out that each of the stocks, Coca-Cola and Pepsi, both have investment grade balance sheets. So the financial risk of a dividend cut in the future is pretty low. That being said, one of the main things to keep in mind here is dividend growth. Although Coca-Cola on paper seems to have a higher dividend in the short term than Pepsi-Cola, Pepsi-Cola has been increasing their annual dividend 745% per year since the turn of the century, against Coca-Cola's 450% annual increase in their dividend payout. And so if we scroll down here, we can see they have this chart here that shows the correlation between the dividend growth and the share price growth for each company. We can see that they point out that over the last few years, Pepsi's stock has increased nearly 400% compared to the roughly 100% change in Coca-Cola's share price since 2000. And so not only has PepsiCo's stock increased more than Coca-Cola's, but their dividend has also increased a lot more than Coca-Cola's over the last 20 or so years. On top of that, there's a chart down here that shows that PepsiCo's total return when you're taking into account reinvestment of dividends is 760% since 2000, compared to only 280% for Coca-Cola, as we can see right here. The orange being total return, price change, 768% compared to Coca-Cola's 281%. So that's pretty interesting to see. It'd be interesting to see where these stocks go from here in terms of their return for their shareholders in the future. But historically speaking, looks like PepsiCo has definitely been doing a little bit better than Coca-Cola, mainly because their dividend growth rate is a lot higher than Coca-Cola's dividend growth rate. Then right here we can see in their income statement, we're comparing PepsiCo's results from 2020, 2021, and 2022. Net revenue increased year over year from $79.4 billion to $86.3 billion. And if I scroll down here, we can see that net income increased from $7.6 billion to $8.9 billion. So they had a pretty good year over the last year, increasing their revenue and also increasing their earnings. Then on page 64, we can see their cash flow statement for 2021, 2022, year over year growth here. We can see operating cash flow for 2022 was $10.8 billion, down from $11.6 billion in 2021. And then if I scroll down here, we can see in their financing activities that PepsiCo actually paid out $6.1 billion in dividends, up from $5.8 billion in 2021. And they also repurchased $1.5 billion of common stock, up from only $106 million of common stock repurchased in 2021. So they returned a ton more value in 2022 in comparison to 2021. That might be one of the things that's contributing to the fact that their stock outperformed the rest of the market over the last year. And lastly, on page 66, we can get a look at their financial position for 2021 compared to 2022. Total assets stayed relatively similar at around $92 billion. But we can see total equity increased from $16 billion to $17.2 billion, with retained earnings increasing by about $2 billion from $65 billion to $67.8 billion. So that gives them more cash to pay out to shareholders in the way of dividends. As the article pointed out, they have a pretty healthy balance sheet here. So the potential for a dividend cut in the future is relatively low risk. Right here, this is a discounted cash flow model to figure out the intrinsic value per share for PepsiCo. Yahoo Finance is estimating that the company's going to grow at around 7% for the next 5 years. They had around $5 billion of free cash flow in 2022, a $36 billion net debt position on their balance sheet, and 1.38 billion shares outstanding. That puts their estimated intrinsic value per share at around $30 per share, which means that compared to their current share price, they're definitely nowhere near trading below intrinsic value per share. They're trading way above their estimated intrinsic value per share. So if they are going to grow at these growth rates over the next 5 to 10 years, then from a value investing perspective, you probably wouldn't want to buy in at the current share price. But keep in mind, there are different parameters for different stocks. PepsiCo is a dividend paying stock, so there are other variables to consider if you want to invest in this company. On the right hand side here, I did a competitor analysis comparing them to their two main competitors, Coca-Cola and Keurig Dr. Pepper. We can see that in comparison, it looks like Coca-Cola has the best profit margins, 22% net profit margin compared to KDP and PepsiCo's 10%. And then we can see in terms of dividend per share, PepsiCo has the highest at $4.53 per share compared to Coca-Cola's $1.76 per share. But also keep in mind, Coca-Cola's share price is a lot lower than PepsiCo's. So even though it might look like PepsiCo is paying out a higher dividend, their share price is also higher. I think Coca-Cola's share price is like $60 per share. So that is something to keep in mind. But as the article pointed out, PepsiCo's dividend growth rate is higher than Coca-Cola's, and that has been paying off for shareholders in the long term. And lastly, I wanted to compare them to some other companies we've looked at in past videos. PepsiCo didn't make it onto the share price to intrinsic value table. Obviously, their estimated intrinsic value is around $30 per share, and they're trading at $184 per share. So that's like 6 times their intrinsic value per share. They're nowhere near getting onto the board here for the companies we've looked at in the past. ExxonMobil, GE, Albertsons, ConocoPhillips, and Google are still the only companies we've looked at over the last 20 or so videos that were trading below intrinsic value per share. In terms of growth rate, PepsiCo only had about a 7% estimated growth rate for the next 5 years, so they didn't get onto the board here either. GE has the highest estimated by Yahoo Finance at 44%. In terms of gross profitability, PepsiCo did have a 53% gross profit margin. That gets them on the board here at 8th place, behind Google's 55% and ahead of Nike's 46%. Adobe still holds the number 1 spot. Nobody's been able to knock Adobe off the number 1 spot with their 89% gross profit margin. In terms of net profit margin, PepsiCo only had a 10% net profit margin, so they don't get on the board there. And then in terms of stock performance over the last 5 years, we saw that PepsiCo is up around 70%, not including their dividend. And so that means that they are not on the board here compared to the other companies we've looked at. Tesla has the highest, obviously, 733% over the last 5 years. They've been doing really good, with AMD and Chipotle coming in 2nd and 3rd place. So all in all, in terms of comparing them to the other companies we've looked at in past videos, in terms of gross profit margin, they're doing pretty good, top 10 for the companies we've looked at, but nowhere else did they manage to get on the board compared to the other companies. In terms of industry analysis, it looks like you probably want to give it to Coca-Cola for profit margins, but for PepsiCo in terms of their dividend, as we saw from the article. And then they're currently not trading anywhere near their estimated intrinsic value per share based on these estimates from Yahoo Finance. So I'm not too sure what to make of PepsiCo in terms of buying into them at the current share price. Let me know what you guys think of Pepsi down in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.